and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. And I say the end of the system because confidence will entirely break. And the fractional reserve slash fiat system runs 100% on confidence. And if you break confidence, and it goes back to what my late partner Jim Sinclair used to say: what is the value of a contract that cannot perform? And the answer is zero. And he posited that you could see gold futures at $10 offered, no bids, and $50,000 bid and no offers. Meaning people will not accept contracts because they know they're not going to perform. They want the real deal in their hands.
Right. And then the spot price becomes the only price. You're not going to have this thing with the futures price and the spot price and all this other stuff. You mentioned backwardation on the silver side. I mean, right now I'm looking at the prices in real time right now. Spot gold, even gold, spot gold's at 42.03. The futures contracts at 42.13. So about $10 off. There's about a $10 delta between the futures contract and the spot contract. So you may even start to see backwardation spill into the gold price relatively soon, maybe by the time you're watching this video, guys.
Right. Exactly correct. And things, obviously, because we live in a computer age, things happen so much faster, than they did 40, 50 years ago. And we should talk a little bit about the two spikes in silver that we had previously to $50. 1980 with the Hunt brothers, and then 2011. The Hunt brothers, that was if you want to say that was vapor at the end. I mean, there was a huge spike. It was basically an intraday spike, or within a week's period of time. They did not stay at $50 for any real length of time. And then again, the same thing happened in 2011. We had the spike up. It didn't go through 50. It fell back, and then they smashed it. And of course, they smashed it in 1988 also. This time, I know it's not good to say this time it's different, but it is different. It's already different. You can see it. We've been over $50 now for a week? Maybe a week and a half. But the thing is, we've gone through 50, and the buying, if anything, has increased. And the risk here is that the chart goes parabolic. And the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. So when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day, and by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there. What's happening is buyers are set up, they're buying that month contract and saying, I want delivery. So they're piling up now. They're forming a line, if you will.
Wow.
It's a bank run into gold and silver, and that's what's going on with COMEX.
And even in the retail space, I've seen this footage of lines being formed outside of Australian bullion dealerships, and you mentioned the shortages in China, but here in America, it's still another sunny day in America. How long until this kind of finds its way here?
You're not seeing retail in North America buy. You've not seen them buy for the last 9 months to a year. What I've seen as a precious metals broker, I've taken more sale orders in the last 12 months than I had combined in the previous 15 years. And what that tells me, and I've asked people, why are you selling? And 95 plus% of the time, people say, I need the money. I got to pay taxes. I got to do this. I got to do that. The money is running out on the streets in the United States, the real economy. Another thing you can look at the traffic flow in Las Vegas. I mean, that's down something like 18%. What that shows you, I mean, those are real-time numbers showing you that the real economy is having a hard time. It's slowing down. You look at the official government numbers, they're all bullshit. They're telling you the economy's growing, inflation's coming down, everything's great. That's not the case. Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it that other than possibly the government telling them don't sell any silver, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours.
That's what I was going to ask. Oh, I mean, wouldn't they just shut down the markets like they did with they did something similar to that with the nickel futures market back in 2022. Nickel spiked like tens of percents within a single day. I mean, I expect over 100% within
150%. But they canceled, and they canceled all those orders. I mean, I think there's still lawsuits going on about that. But basically, what they did was they pulled the plug on that market, and they said all the days trading didn't count; they weren't trades. And that the way they did that was they didn't have to pull their pants down and say, "Look, we can't deliver this."
Yeah. So then, if you're stacking silver, isn't that a concern to have? Is the possibility that they just close the markets down, and then there's no set price on your silver, or the last set price is the only price?
I think that's not really the right way to look at it. It shouldn't be concerning if you're sitting on silver and markets close. I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold. I mean, you're going to have a hard time with silver eagles or 1 ounce bars or 1 ounce rounds, silver rounds. You're going to have a problem getting change back. I mean, if you deal with a farmer and let's say you want 2 dozen eggs, how are you can't get change back, but a silver dime will do it.
Yeah. So why is
I do want to talk about that.
Go ahead.
Let me just mention this because I've got a bunch of emails in the last 3 or 4 days. The wholesalers have really pulled their bids back on junk silver. Junk silver now, if you're going to sell it, you're looking at $2.50 or $3 below spot. The only silver above spot in North America are silver eagles. I think they're about like $1 over spot. But people are concerned that, oh my gosh, I'm not going to be able to sell my silver. Well, understand that when all this silver that's been sold, all this junk silver, that's been melted down. And of course, they've not made any silver dimes or quarters since 1964. So there is no more supply, and the supply that has existed, any of that that's being sold, if you're selling it at $2 or $3 under spot, I guarantee you your wholesaler is sending that to a refinery and just picking up the 3, 4, 5% VIG and putting that in their pocket. Understand that can't go on forever. And also, there are refiners now saying they're not accepting any more silver because they've been inundated, and it's a physical process. It's not like pressing a computer key and boom, it's done. They actually have to refine it out. They've got to refine the 10% copper out if they want to get it to 99.99 pure.
Yeah.
So while right now it feels a little bit, maybe did I make a mistake buying junk silver? No. If you wait a month, 2 months, 3 months, and this is assuming the system continues and does not collapse, in the future, in my opinion, junk silver is going to end up holding the highest premium of any form of silver in North America because the supply is being wiped out whenever anybody sells it. It's being destroyed. It's being melted down.
Wow. So that's a good tip and insight. So I want to take it back to a potential market shutdown. Why would a failure to deliver in a metal like silver create a widespread effect of shutting down the entirety of the markets? Why would the stock market shut down and all these other markets shut down? If there's
Right. Well, first off, that will bleed over to gold, and gold will also fail to deliver. Understand that gold and silver have been suppressed. The prices have been suppressed literally for 50 years, since 1976 when they started with futures and options on metals. Understand that gold has been suppressed because it is the direct competitor to fiat currencies, whether it's the dollar, the pound, the euro, the yen, whatever fiat currency, gold is the direct competitor. Now, if let's say 10 years ago, gold didn't stop, or 15 years ago, gold didn't stop at the $1,900, $2,000 level, and it blew through, and it got to 4,000 like we are now, and then it moved to 6, 7, 8,000, and started spiking. What that tells you is it's not gold going up; it's the fiat currency that's losing value. So that spills out, and it becomes a loss of confidence, and that would have and will prevent the U.S. from using a credit card with. Hold on. It would prevent or preclude the U.S. Treasury and other treasuries that borrow, but the U.S. in particular that has had an unlimited amount to borrow on the credit card. Thus, we've got $37, $38 trillion. It would cause interest rates to go up. It would just gum up the entire system, which would then gum up the real economy. But it would be extremely difficult for finance to continue as finance has continued because it's been a Ponzi scheme, a Ponzi scheme of credit, and it would cast a dark shadow on credit. Meaning, am I going to get paid back? People will be wondering about the credit system, and that's a problem. And you and I have talked about this before. Everything runs on credit. The entire financial system runs on credit. The real economy, everything that you touch, everything that you do every day has, credit has touched it in one way or another for that to have been created or be able to work. So it's important to understand that silver being such a small market, it's been very easy to manipulate.
Hmm.
And they had to manipulate silver harder than gold because if silver ever got on hand, then gold goes. And if gold goes, then you have confidence breaking. And understand that you were talking about derivatives. It's a zero sum game in the OTC derivatives market where there's over $2 quadrillion worth of paper or contracts. The problem with that, because it's a zero sum game, if you have a huge winner, that also means there's a huge loser. And was that loss big enough to put the loser out of business? And if the answer is yes, then the loser can't pay the winner, which means the winner then becomes a loser also.
Right.
And that will spread across markets everywhere. That'll spread across credit markets. It'll spread across stock markets, equity markets. Interest rates will explode. That'll destroy the ability to carry real estate on debt. It's a seizure or a meltdown of credit is what we're facing.
Is there a chance that they can put the kibosh on this for a little while longer? I've been watching some of this overnight trading on the precious metals, and last night you had, or a couple of nights ago, you had silver smash down from 53 down to 50. Last night you also had another smashing down. It looks like they are trying to put the kibosh on it, but it's been an unsuccessful, fruitless endeavor. It's like going back to the well over and over again. Each time you go back to the well, it's less effective than versus a previous time. Is there any chance that they could, maybe kick this can down the road a little further, or have they used every bullet in the chamber, so to speak?
Yeah. There's always a chance because you used the word for a while. For the end scenario, mathematically, no, they cannot fix this. They can't kick the can down the road. It's here. It's now. They're using their old tricks. They've raised margin on COMEX, which they've done many times before. They raised the margins and then forced the longs out because they can't afford the margin. They sell. I think the other day, in an hour's time, they sold something like 20,000 contracts. I mean, that's a huge amount of silver, and that silver does not exist. Remember, it's 5,000 ounces per contract, which I think that number worked out to be about 1 billion ounces were sold. The world only produces 800 million, 850 million ounces collectively in a year's time.
Yeah.
And that's only $40 billion today.
Yep.
The global production of silver, even at all-time high numbers of $52, $53, is only just over $40 billion. $40 billion is a laughable number today.
Mm-hmm.
I mean, 15, 20 years ago, it was pretty big money. I can tell you back in the 1980s, early 1990s, the biggest takeover, the two biggest takeovers in the mid 80s was Texaco and I think KKR. One was 13 billion, the other was 25 billion. So yes, while the numbers are bigger today, but today you're talking about companies being taken over for, many times $40 billion. And there's plenty of individuals that are worth over $40 billion.
Yep. All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video. Yep, a billion doesn't go as far as it used to. I mean, you could probably just find like some random crypto shitcoin out there that has a market cap of $40 billion. It's not anything extraordinary, much to your point. Bill, at the start of this program, we talked about some of the shortages we've been seeing in China, some bullion dealers selling silver, for the bullion dealers that do have it in China, selling silver upwards of
20. Just one.
Just one.
Yeah, just one bullion
dealer. That's selling it for $128
I understand
an ounce.
Right, and as I understand it, that's the only bullion dealer that is selling silver right now. I mean, I haven't verified it. I don't even know if I can verify it, but that's the story.
So does it become